It's Wednesday, July 15th, and here's what you need to know by noon. The United States and Iran are trading blows over the world's most important oil passage, and it's already pushing prices higher. Plus, IBM has its worst day on Wall Street since the 1960s. Inflation actually cools more than expected, and a record fraud crackdown. Let's get into it. We start with a conflict that's escalating fast. Over the past week, the U.S. military has carried out repeated strikes on Iran, and Iran has hit back, attacking oil tankers in the Strait of Hormuz and firing missiles and drones at American forces in the Gulf. The White House says operations formally restarted on July 7th. Here's why it matters far beyond the region. The Strait of Hormuz is a narrow waterway that roughly 1/5 of the world's oil passes through every single day. As the fighting spread, traffic collapsed, from about 130 ships a day down to just 57 over one weekend, as tankers steer clear of the crossfire. Markets noticed immediately. Oil posted one of its biggest single-day jumps of the year, nearly 10%, with Brent crude climbing to about $85 a barrel, its highest level in a month. That's roughly 17% above where prices sat before the conflict began, and that eventually shows up at the gas pump. President Trump has described the U.S. strikes as, quote, limited, measured, and planned, aimed, he says, at protecting commercial shipping. He's also notified Congress that he intends to blockade Iranian ports and charge vessels a fee to cross the strait, casting the U.S. as its guardian. But there's a fight at home over who gets to make that call. Just yesterday, Senate Democrats blocked the year's big defense bill. It fell short of the 60 votes needed to advance. They objected on two fronts: that the bill would effectively bless the Iran campaign without a congressional vote, and that it carried a provision to deepen military cooperation between the U.S. and Israel. Republicans backed the bill. The president says he has the constitutional authority to act. His critics say he doesn't. We'll let you weigh it. Here's the rest of what's happening. First, a stunner on Wall Street. IBM had its worst single day since 1968. Shares fell about 25% after the company warned its quarterly results came in light. The reason is a sign of the times. IBM says its customers abruptly redirected their budgets toward artificial intelligence hardware, servers, storage, and memory, and away from IBM's traditional software and mainframe business. The chief executive said the company did not anticipate the magnitude of that shift. Second, some good news on prices. June's inflation report came in cooler than expected. Annual inflation dropped to 3.5%, down from 4.2% the month before, and below the roughly 3.9% economists had forecast. Falling gas prices did most of the work. The catch: with oil now spiking on the Iran conflict, that relief may not last. And third, a record crackdown on fraud. The Justice Department has charged 455 people in the largest healthcare fraud takedown in its history. Schemes, it says, add up to more than $6.5 billion, much of it aimed at Medicare. It's part of a broader enforcement wave that's topped $1 billion in cases in back-to-back weeks. So what should you watch? The Federal Reserve meets in under 2 weeks. Normally, a cooler inflation number like this morning's would nudge them toward cutting interest rates. But a widening war and rising oil prices pull the other way. That tension is the story to follow. Plus, more bank earnings roll in today. That's markets news, not advice. And that's Wednesday. Caught up. A dangerous escalation in the Gulf, a historic drop for IBM, inflation cooling for now, and a record fraud sweep. We'll be back tomorrow morning. This has been Know by Noon.